Hi, welcome to the data economic review for last week and outlook for this week, Monday morning workshop. Just a quick summary of what happened last week. FTSE was up about 1%, that's about 60 odd points. Down S&Ps were flat-ish to a little bit lower. Gold unchanged, believe it or not. A bit of a topsy-turvy week for gold. Crude, yeah, it's down about $1.50, and bonds up. So risk off very much in mood really again, I'm afraid. Certainly Friday was an interesting day, dominated by the run-up to the US election, which is tomorrow. A bit more on that in a second. And obviously the non-farm payroll Friday, which came out better than expected, 171,000 versus 120,000 expected. Headline rate was higher, that's at 7.9%, was as expected, and that's due to higher participation rate. So what caused the sell-off Friday? Non-farm payroll? I don't think so, no. More likely that the election outcome has become far too close to call. It's odd in many respects because we've known about the election for months, obviously, but I think there's a sudden realization that the result could lead to a slim majority for Obama, or possibly a tie. And the FT had an article, and I got the article up on my site. Okay, no, it's been replaced, but there was an article earlier on about the possibility of a Romney-Biden White House. Now, that may sound a little bit strange, because Romney obviously is the presidential candidate for the Republicans, and Biden is the running mate of Obama. The reason why that could happen is that if there's a tie with 269 votes each, then the House of Representatives, or Congress, that is under Republican control, and they would pick the president, and the Senate, which is under Democratic control, would pick the vice president. Hence the reason why you could get a Romney-Biden team in the White House. And needless to say, that would be an absolute disaster, and that's one of the problems that we're encountering, or the markets have encountered. I think it's the uncertainty now, and that's really the reasons why the market shed as much as they did. Really, the other outcomes, obviously, Obama wins. Most obvious conclusion is that the bonds will do fine, as Ben Bernanke will maintain the monetary easing and QE purchasing of treasuries, etc. Romney wins. Well, you know, he's pretty much nailed his colours to the mast there in terms of cuts and taxes, etc. And with his background and all the sort of points that he's been making in the run-up to the election, he's got a very pro-business agenda, which the markets would also like. The election tomorrow, obviously, all day. The results will be known, we think, about midnight on Tuesday night in the US. So that's 5 o'clock in the morning our time, just in time for the the European opening. So it should be a lively opening, potentially on Wednesday morning. So that's just a little summary of what's expected in terms of the election. Rest of data, well, we do have other stuff happening in the world. This is a particularly busy week for elections in inverted commas. I should say elections in inverted commas. On Thursday, we have the it's the Communist Party in China. It's their 18th National Congress. It's not really an election. It's when they appoint their new leader, or is announced. We also have on Thursday other important bits of data. We've got the UK rate announcement. We've got the European announcement, the ECB, which follows 45 minutes later. We're not expecting any change in either of those statements or from the ECB or MPC, although we will be interested to hear what they've got to say from the ECB regarding Greece and Spain, and also in the UK any sort of hints that perhaps QE, the next round of QE, might be in the offing. But the QE, the current QE finishes at the end of this month, so that's something I think perhaps they might wait a couple of months just to see what the effects have been before discussing further QE measures in the UK. We also have trade balance as well, but I think a lot of this is going to be overshadowed by the aftermath from the US elections, but on its own, trade balance has an impact on stocks and on the dollar, so that's something you'll need to watch out for at 1:30 on Thursday. Then on Friday, we've got the flash or prelim University of Michigan consumer sentiment at 2 to 3. Again, reasonably positive in comparison to those sort of measurements in the Eurozone. 82.6 expected unchanged from previous month, which was actually revised down from 83.1 for an initial reading in the previous month. So that's a summary of what's going on. Mostly US election dominated. Key events really are on Thursday. We do have the Reserve Bank of Australia with its rate announcement on, tonight, Tuesday morning. So if you trade Aussie dollar, please be careful to watch that. Other than that, we've got ISM non-manufacturing today in the US. As I said, and I think those are the key things to look out for. Please just refer to this Forex Factory calendar just for other announcements. So we've got highlighted here the more important ones. But that's it. Thanks very much for listening. We will reconvene on Wednesday for our midweek workshop. Thanks very much.